first wanted to start with sort of that corporate governance problem that's come up so much recently, particularly in the example of WeWork. How do you measure a board's corporate governance? Is it the fact that they need a female on the board? What does good corporate governance look like to you?
It's an interesting question because I think we've strayed very far from what it started out. When I was in law school, we talked a lot about like all of the people that you're supposed to treat as your constituents, and that includes not just the investors, but also employees and your community and the public at large. And I think we've moved from serving the public and taking care of employees to just a focus on wealth generation. A lot of that comes from some changes that started with Google. When they started their corporate formation, the founders had a huge super vote for each share of stock that they had that gave them control of the company. I don't know if it still goes on to this day, but they've had, super voting control of all sorts of different issues, and that has come down to a lot of startups that have formed since. So my understanding is WeWork had maybe 20 votes per share for the founder and CEO, which made him the ultimate decider of many things. And when you have a board that can't really do that much because the founder has so much control, you wonder if that's actually going to be effective at all.
Are the markets or companies doing a good enough job of making boards diverse enough early on? You can't just do it right before you're about to go public. What's happening 5 years previously?
Yeah, I think there's a problem both at the board level and at the executive level where, it's this ongoing problem in tech where VC firms have very few women, they have very few people of color, and they have a tiny, tiny fraction. You can count the number of women of color, especially from underrepresented groups. And a lot of times those early boards are formed by investors, and it's the senior partners and the managing partners who get to sit on the boards and make these decisions. And often they are very homogeneous. They are talking to people who look like them and who don't experience a lot of the things that people from different groups experience. They don't have exposure. They live in a bubble. And when you have a board that is very homogeneous, they often miss big things. And if you look at a lot of companies and their problems, they are, because they don't have other voices, they don't have other perspectives, they don't understand that, hey, people who are renting on Airbnb might be from different groups, and there might be some racism if you have pictures, and how are we going to address that? And they end up addressing it much later, as you say, like 5 years later when they start getting scale, and then they have to rebuild their whole system.
So then what does an ethical tech company look like to you?
Oh, it starts from the very beginning when you're hiring the first engineers, when you're hiring the first marketing people, when you're hiring the first, when you're building your company, you have to think about, like, am I looking at all the right places for my team? Am I only hiring from my friends? Am I only hiring people who look like me? Am I only hiring people like from my fraternity in the early days? So, like, finding people who are coming from different experiences, finding people who are coming from different backgrounds so they have different perspectives is really important from the very early days. So at Project Include, we have programs to help encourage early stage startups to really look and measure and hold themselves accountable for the diversity on their teams, and to make sure that they're including those people from different groups in a way that everybody's having a good experience.
What do the numbers actually show you about the bottom line of companies that have diverse and inclusion versus those that do not?
Yeah, I think like McKinsey and Lean In have done a lot of work to show that companies that have racial and gender diversity, I think, are 35% more likely to have better financial results. So that's a huge percentage. If I'm running a company, I would much rather have those odds be better by 35% than not. And I just don't understand why companies are not reading the research and internalizing it and bringing together more diverse boards and more diverse management teams.
Well, you are part of that change. You're an investor yourself. As you take a look at the companies in which you're investing in the VC pipeline, how diverse does it look? How involved are you in the day-to-day to make sure that's included?
Yeah, For me, it starts at the investment level. Like when I'm thinking about investing, I talk to the founders about diversity and inclusion and whether it's a priority, especially if the team doesn't have much diversity in the founder group to start. And I only work with people who are interested. If they're, planning on going the way that we've gone for the past, 5-6 decades in tech, like, great, there are plenty of people who can help you, and there are plenty of people who would be happy to. For me, it's less interesting.
Just from a broad perspective, we take a look at a lot of the IPOs that have gone south this year. What's the pressure to be profitable, especially to start up these days?
I think with the recent IPOs kind of imploding or not being able to get out or going down a significant amount, people are all of a sudden realizing the markets are not rewarding your customer base, for your customer base. They're actually looking for a long-term strategy and long-term business model. And that is driving more investors, I think, to look earlier. Like, we can't just ride out a big set of growth numbers. We actually need to look at the dollars and the cash flow and the actual profitability. And that is changing how I don't see the whole swath of investments, but from my perspective, people are getting a little bit more focused on, like, what are your revenue numbers, what is your business plan for getting to profitability, and how are you going to be able to be a long-term business?
Well, and a lot of the other concerns have been about valuation. As you take a look at the investing landscape, do things feel overvalued to you?
They felt overvalued for a long time, and I think you look at these last companies where they're raising billions and billions of dollars. It's incredibly, it's just felt very frothy, but I think it's been on this pace of growing valuation for many, many years, so it doesn't feel like there was a sudden jump to this hugely frothy valuation. It's been this ongoing climb, and now I think it's finally come to the point where maybe the bubble's going to burst.
Finally here, companies like SoftBank, big money coming in, have they structurally changed the environment, or can you still compete?
That's a good question. So I invest at the very early stage when it might be just 2 founders, or it might just be 5 employees. And I think everybody's kind of trying to expand what they cover. So, people at my level are trying to raise funds so that they can invest in the next stage when they see which of the early stage startups are actually making huge gains, and I can double down and put more money in because I wasn't able to get that much ownership because the valuations are so high. And now you see firms saying, no, you shouldn't work with individual investors, you should only work with firms, because firms are going earlier and earlier so they can have that kind of bird's eye view into what's working sooner and get into them with an advantage because they have the relationship. So things are still changing. So it's not clear. I hope there's still room for people like me, because the firms that are out there today are very homogeneous. And if you don't allow new players to come in, it's going to stay that way.